Hey, today we're going to go over my high conviction swing strategy. This is the one that I use weekly, sometimes multiple entries and exits a week. And this is my bread and butter. This is the Triple R setup. It is built off of the idea of a trending stock, and we are looking for a retracement, a reaction, and a remount. So continuing the trend, a pullback and then continuing the trend is the general trade. It's certainly something you've seen before, but there is a quote that I love. I'm not sure exactly whose it was, but it said that every trader starts with simplicity and then chases complexity and then returns to simplicity, but with scars. And it's really so true. I've been in the markets for a decade, over a decade now. I've certainly followed that path where I just found myself trying too many things, relying on indicators or call rooms, all this kind of stuff. And I've reverted back to this strategy that follows the structure of the market. This is how the market moves, and we're able to find entries over and over and over again within this that are nice, clean swing entries, easy to understand, easy to identify, pull the trigger, and compound wins to create meaningful growth in your portfolio. So let's dive in. Let's understand the Triple R framework. A Triple R is a way to trade trending stocks within structure. You're not buying breakouts, you're not guessing bottoms, you're identifying strong trends, waiting for the pullback, and positioning for the continuation. It's how the market moves. So this allows you to trade with structure, it eliminates chasing, and makes for much more intentional trading. So the 3 R's are retrace, reaction, and remount. And it's important that we're sure to be trading this on trending stocks backed by fundamentals, okay? This is what Wall Street loves. They love sales growth, and a lot of times you will see these things trend for years, and we're just looking for them to go on sale and continue the trend. So we've got a trending stock, a retracement, a reaction at or around our level, and a remount, a continuation of the trend. So this setup works because you're working with the trend. You're buying discounted strength. You're not chasing. Your risk is defined and tight because we have clear levels, and you're just allowing the remount of the trend or a continuation to do the heavy lifting. I don't care about perfection. I care about repeatability. Okay, so let's jump in and take a look at a live chart here. This is replayed footage, but these are 3 trades that I did take in DoorDash, which is a stock with increasing fundamentals, growing sales, growing revenues. Wall Street really rewards these sort of fundamentals, and this is a growth stock that has shown a history of being able to hold and sustain a trend. So let's take a look at some price action here. This is on the daily chart, and I'll let it play, and then I'll walk through what I see, what I traded. So what we've got here is Dash, and we'll jump into the live chart here. And this is a company that is showing a history of fundamental growth, right? Of growing sales, revenue, margins, all these kind of things that Wall Street really loves and will put a lot of momentum behind. And you can see this thing has just been a trender. When it gets on trend, it's able to sustain these moves for quite a long time, right? It reacts really well to structure. My entire Focus 50 is built of stocks just like this. But this is one I trade all the time, right? I just got another one off the other day before the earnings report, and I want to show you what I saw here. You saw the live chart of it playing out. So this was a larger trade that I did off of the weekly, but we'll zoom into some of the more recent trades that I've taken on the daily. It is typically how I like to trade the Triple R setup. And here we've got, this was a tariff sell-off. This was completely unrelated to the stock. And when we started to see a rebound in the market, pretty much the whole market looked like this. A lot of things were bouncing off of the 200, but we saw a reaction and we realized, hey, we're probably getting back on trend. And we remounted these short-term and midterm moving averages. It was a trigger for me to enter, but we had a retracement, a reaction, and a remount, right? That's my trigger, that's my entry. And then, so we almost immediately got our 2-to-1 there. Then it happened again. We got a retracement, a reaction at or around our levels, and then a remount, and then boom, you can see exactly what happened there. And then, you know, a couple months went by, we did not trade Dash, but we're looking, it stayed on watch. I flipped through my Focus 50 daily and, you know, post watch list daily from it. And here it is again. We had a retracement off of highs. We had a reaction at or around our levels and a remount of our short-term moving average. That was our buy trigger. And we got in and out, you know, right before earnings, got another trade out of Dash. And this is something I can go through chart after chart, and we will do a few more here, but that is the trade. You need a retracement, a reaction, and a remount. A retracement, a reaction at or around the levels, and a remount, okay? A retracement, a reaction at or around the levels, and a remount, okay? So that is what we're looking for, and I can trade this over and over and over again. It is trading within market structure. This thing prints, okay? A couple more examples of some recent trades that I've taken here would be on Meta. We've got the tariff sell-off, we get back on trend, and we get a retracement, a reaction at or around our levels, and a remount. So we hop in right there, we set our 2-to-1, and we got it almost immediately. And this was another one that I wanted to get, but we had earnings just a bit too soon. Sure, it would have played out, but I never trade this setup into earnings. It's not an option. Okay, be clear on that before we get any deeper. Another one that I've been trading quite a bit lately is Hood. I'm actually in this now again, but here is the chart. This was a bit of a different setup, but here was one here. It was trending, trending, trending. We get a retracement, a reaction at or around our level, a remount, and we're in for a 2-to-1. Done. Couple days later, and I've just entered this just a couple days ago. Again, the exact same setup. We've got a trending stock supported, backed by fundamentals. We get a retracement, a reaction at or around one of our levels, and a remount of the short term is my trigger. I'm back in looking for another 2-to-1 out of Hood, and hopefully we get it. And here it is again. I'm sure you can see already the setup, but we've got a trending stock showing the ability to respect structure. We get I did not take this one, but we get a retracement, a reaction, a remount, and we're in. But I mean, same idea here. We get a retracement, a reaction, a remount of our level, and we're in. Okay, this happens over and over and over. This is how the market moves, okay? So another one that I just took last week, or I think this one was about 2 weeks ago, is we've got a trending stock that's showing the ability to respect structure, and it is backed by strong or growing fundamentals. We get a retracement, a reaction at or around one of our levels, a remount, we're in, and almost immediately the next day, I got my 2-to-1 on this, and I'm out, looking for the next one, ready to move on, okay? We don't need to worry about holding these things too long. I set my levels, I set a 2-to-1, I hit it, I'm out. I pay the trader, okay? Same thing goes with the stop. Hit my stop, I'm out. Now, you're probably wondering, what are our levels? What do I mean, respect our levels? And it's very simple. I trade a 9 EMA, a 50 MA, and a 200 MA, okay? And that's it. That is all I use. I've used MACDs, I've used volume shelves, oh gosh, everything, literally everything. I have tried it all over the last decade, and I've come back to simplicity. As I said, I've come back to simplicity with some scars. This is all you need to see the structure. The price action is king, and this is all you need to see, define structure and reactions around levels in the markets. And these levels are very important to institutional traders as well. It's why you can see such clean structure around them. So that is the setup. That is the triple R. We're looking for strong trending stocks to retrace, react, and remount, resume the trend. It's simple and it happens often, all right? This allows us to continue to deploy capital in a risk-managed environment. So let's touch on risk management just a second here, and that is your non-negotiable. You must protect your capital. Even the best strategies fail without strict risk management. You have to build your own risk profile. It's something I demand of anyone that works with me, that they submit this. You must know your max exposure, your max position size, and your stop and target levels before you take any trade. This is not guessing. This is probabilities. And we are always cutting losses swiftly, okay? If we're early, if we're mispositioned, if there's a macro event completely out of our control, it's fine. All right, this hits at over 70%. We're doing 2-to-1. We're printing money, guys, with the triple R setup. We are cutting our losses swiftly. we will get back in should it remount the trend or resume the trend. Okay, there is no averaging down on the triple R setup. It's out of the question. Discipline is paramount. So as for stock selection, I do keep a Focus 50 that I flip through every day and make a watch list out of inside of the Discord. It's just a list of strong companies in clear uptrends, backed by growing sales, and ideally riding momentum after an earnings breakout or a strong quarter or breaking structure, after an all-time high break and it's now setting a new trend, things like that. You don't need to track endless tickers. You need 50 leaders that move clean, respect levels, and trend hard. That's where Triple R thrives. So listen, the Triple R setup is simple, it's powerful, and it's repeatable. This is my highest conviction setup. If you build a strategy around just this and master it and master risk management, you will outperform 90% of traders. So if you've got any questions, then obviously you've got access to me through Discord and you can reach out. If you'd like to do more chart review, then please do reach out and I'd love to work with you. I'd love to identify this more, but what you should do first on your own is go through the list of the Focus 50 on the daily chart and look at how many times you can identify the Triple R setup on every single one of them, okay? That's why they're there. If you would like to be a little less active in the markets, switch over to the 1 week and do the exact same setup. And check out how these tickers react off of the 50 on the 1 week. Man, it's so clean. You will see a ton of Triple R setups there, and your frequency of entering and exiting will be a little less than using the daily chart, but it is super clean on the weekly if you'd like to add even more conviction. So check it out and get in touch with me with any questions. Thanks.